Hey everybody, going to go over our Forex trades for today, June 18th, Thursday. We were off yesterday because it was Fed day, so we don't trade on Fed days, as you know. These two trades, so we weren't in the office. These two trades we were out of before the Fed yesterday. Actually, the night overnight before the Fed. But no other action last night or this morning, unfortunately. But both trades were in pound US dollar, and we ended up losing 6 pips between the two trades. But we had 10% of our normal size, so less than 1 pip, 0.6 pips all total. But the first trade you're looking at here was a short, 1.55778. And you can see how she ran up. She was consolidating, and then we got a signal to go long. So this was before we shut the computers down for the evening. So we took the loss of 59.9 pips, or just precise 6.0. Went long, and then it broke out of that long of this consolidation, which lasted all until about 4:30 in the morning, and then started to pop. Well, obviously we weren't in the office that early, but we had put our profit target in just ahead of the figure, which we normally do, of 1.5700, just because that could be a psychological level. Took us out. We came in the office. Actually, we didn't come in the office, but when we looked for see what was going on to keep ourselves updated before the Fed and then after the Fed, we saw that it ripped through the figure, ran all the way up to about 1.5750. Pulled back, hung around the figure, just pretty much where we got out, and then this big move up is the Fed announcement, and then you can see what it did, up, consolidated, up again last night and early this morning. So that's it with those two trades. As far as any economic news this morning, initial jobless claims came out a little bit better than expected. Consumer pricing index came out, which is gauges inflation. If you back out food and energy, which is the two most volatile in that measure, missed estimates, only 1.7% growth. So it's amazing that the Fed has been keeping, and central banks all around the world for the most part have been keeping interest rates basically at zero bound, and inflation is so muted. It's absolutely unbelievable. Another thing, Goldman Sachs this morning, they came out and they're pushing back their forecast for the first Fed rate hike from September of this year to December of this year. So Janet Yellen hinted yesterday that there's going to be there'll most likely be only one rate increase this year. So Goldman's thinking it's going to come at the end of the year in December. Amazingly, just 3 or 4 months ago, everyone was expecting June rate hike, the majority of people. Then that reduced to about 50-50 on Fed funds in the futures market. And then by sometime last month of May, that changed to September. So I would say September is probably 50-50. December, obviously, the December meeting is going to be a lot higher chance of it happening, but we'll see what happens. We'll see when the GDP second quarter comes out. Goldman Sachs lowered their second quarter estimates for GDP the other day from 3% to 2.5%, and the Atlanta Fed GDP now indicator is looking at 1.9 for the second quarter. So that rate hike may be off the table completely come September or October. For the December rate hike. You got the IMF basically a week or two ago pleading with Janet Yellen and the Fed not to raise rates. So it'll be interesting to see what happens. Anyway, so that's it. It was a down day, down less than 1 pip, so not a big deal. But really been boring, really has been. So that's it. We're going to wrap it up. If any signals come out, they'll be coming your way. And, hopefully we get some action. I doubt it. Tomorrow is Friday, so that's it. Have a great rest of your day.